Bounce, yeah, bounce, yeah, It's your boy Crypto Blood. Welcome to another episode of My Two Satoshis. It is August 10th, 2018, and today's track is something I'm playing. It's my song request. I've been rocking it all day. This is off that Jay-Z Rock La Familia, the Dynasty album, Change the Game with Benny Siegel and Myth Bleaks. This is a classic. If you guys don't know about it, go bump that today while you riding around, because I sure am. But hey, hope you guys are hanging in there today. It's Friday, last day of the working week, but not for me. I work 7 days a week, people. But today we're going to get into an op-ed that I found that caught my attention. Really, this guy's really spitting some mad truth about these new people coming into cryptocurrencies, the same people that swore up and down it was internet money, it was a Ponzi scheme, it was fake. Now you've got these same people, mainly I'm talking about a lot of these analysts from Wall Street, now telling you and me what Bitcoin is and where it's going and how this and all that. So we're going to look at this op-ed. I loved it. I think it's something that we should highlight for sure. And then, ironically enough, the second article, and actually I think I may talk about this and cover this first, but one analyst, Wall Street analyst, is saying that Bitcoin is going to head to $4,000 before making a move up. Not saying that they're wrong, but I'm just, come on, man. We'll take a look at both of those articles in a second. First, get over to cryptoblood.io. You got 6 days left to join that trading room. I did update the number. We got 32 slots available at $2.99 for 3 months. Make sure you get yours locked and loaded before it closes. I'm closing that door next Wednesday, and you won't be able to join until, well, three months from then. So check it out if you guys are interested. But let's take a look at that market cap. Bitcoin's dominance is at 49.14%, almost to that 50%. The global market cap is at $225 billion currently at the time of recording. I think we're going to start heading lower, in my opinion. I think we're going to take one more leg lower and try those levels. As a matter of fact, let me just bring that up really quickly. I think we're going to head back to the 6,000 area and see if we can keep that as a support level. Me personally, it can go either way. I don't know. I'm not going to sit up here and say I know it's going to bounce off of there, because I just don't, and no one does. We have to kind of see what happens here, and don't let anybody tell you they know what's going on. It's a 50-50 call there, so they could be right or they could be wrong. It just depends on what side of the coin it lands. So I'll keep an eye on that though. But the first article is out of AMB Crypto. Says here, Bitcoin to slump to 4,000, says analysts after gloomy August prices. So we got one of the analysts from Fundstrat, not Tom Lee, but I guess a technical analysis guy over there, says that technical analysis predict that Bitcoin has not seen the worst of its bearish rally as of yet. Robert Slummer of Fundstrat, a technical analyst, has stated that we should expect further testing of the next support level. The coin has also fallen below its 50-day moving average, which is usually indicative of a bearish run. Slummer, hope I'm saying his name correctly, provided more clarity on the price movement, stating, "You're getting a bounce today, but I expect the next level of support down close to 6,100. It's pretty early to make the case that you need to go long. It's got to stabilize first." So I do agree with him on that. I definitely do agree with him. I have levels of 6,000, but again, I don't know what exchange he's using, but off of Bitstamp, which I'm kind of putting my analysis on, we're sitting at 6,000 for that next support. The article goes on to say that analyst from Bloomberg Intelligence, Mike McGlone, stated that the price of Bitcoin will decline further. He stated that this correction was tame when compared to those that came before it. He says Bitcoin is in a dump mode following the pump run up on the potential for a US ETF. It may not subside until revisiting good support near 4,000. Wow, his is way lower, which he puts emphasis on is last year's mean. Bitcoin has had a tough beginning in the third quarter of the year, seeing significant losses as the bear market takes hold. The opening price of the top cryptocurrency this month was very close to the opening price seen for July. The coin was trading at around 6,200 to 6,400 mark for the first week of the month, continuing from a bearish run towards the latter half of July. It also says here the decline to sub 7,000 levels began on July 31st, going from 8,100 to 7,600 by August 1st. There was a further drop to 7,000 by August 4th. The coin traded around 7,000 level, mostly below the support until August 8th. It then broke the 7,000 mark on August 8th, dropping down to a low of 6,300 after the news of the Van Eck ETF being scheduled broke. And lastly, the coin is close to gaining control of about half of the total cryptocurrency market, as it is currently at around 49.1% dominance. Its $111 billion market capitalization is indicative of when the market itself bled around 30 billion when Bitcoin dropped below 7,000. So what do you guys think about that? Now, reading that, I can see the article is really more so based on technical analysis, so I can respect that. I can see 6,000 reverting back to a mean is possible at 4,000 for sure. All things eventually revert back to a mean. Just depends on when it meets that mean. Can we hold off and keep price where we are or close to where we are for a few months to make that mean come up a little bit? I don't know, but I will say this: if we do head lower meaning sub 55, 5,800, we start getting lower than that, man, I'm telling you guys, those altcoins are going to get slaughtered. They're going to get slaughtered. So I'm just warning you, if you're heavily weighted in altcoins, you're going to see a significant decrease in your portfolio value over the next coming months until I believe we'll see another run up as we get close to that end of September ETF delayed decision marker, at which point I think we'll get a run up to that. And then when we'll get that next delay, we'll see another leg down. It just depends on where we are at the point of that next delay by the SEC, I think. That kind of determines where our next low is. So I'm hoping we can kind of settle in this area, 58, 65 range for a month or so, and then start to move up, maybe towards 75, 8,000 again, as we anticipate a decision again by the SEC, which I think will be delayed one more time, and then we'll have another leg down, and then in March, February time frame, we should see a pass of the ETF, which at that point, probably I would say February, we may start to see another run up toward the decision, right? Buy the rumor, sell the news. But in this particular instance, I believe it's buy the rumor, buy even more on the news. So we'll definitely kick off 2019, in my opinion, with a nice bullish tone, which should carry us into the end of 2019, 2020. So let's see what happens. That's what I think. Let me know what you think. I love to hear your opinion on these topics, people. Make sure you leave those in the comments below. The second one is an op-ed out of Bitcoin.com, and this is written by Kay Sedgwick, and it says here, the apocalyptic predictions about privacy coins are very wide on the mark. He says here, Bitcoin is a permissionless ledger. In plain English, that means you don't need to ask anyone's damn permission to use it. There are no terms and conditions to read, no checkbox to tick, and no forms to sign before you can send or receive Bitcoin. But if some people had their way, pseudonymous cryptocurrencies as well as anonymous coins like Monero would only be used with the government's permission. These people are wrong. So wrong it hurts, he says. Bad advice is easy to come by. So he says here, I love this paragraph here. He says, ever since Bitcoin became officially cool sometime last year, all its previous haters and ignorers have come out of the woodwork offering to share their insights. Every day, the editorial inbox at bitcoinnews.com fills with pitches from bankers, regulators, and financiers eager to dispense sound bites on this new asset class called cryptocurrency, the very same one that we could swear we've been covering for years. There's no shame in being late to crypto. Cool points are not awarded for the number of years you've been using Bitcoin, but it does stick in the craw when Johnny-come-latelys try and position themselves as crypto experts and insist on telling the rest of us what to do with them. One such newcomer is Weiss, an agency founded in 1971 that has since gone on to rate more than 5,500 institutions and investments. It's new to cryptocurrencies though, 2018 new, and it shows. We originally reported on its nonsensical crypto ratings back in January, and I covered this actually, guys, when it awarded Bitcoin a C+, i.e. mediocre. It then supplemented this with a review of 93 cryptocurrencies in May, in which Bitcoin scored a B-. Now I'm just going to stop right there because I did a video on, and I'll link it, I did a video on Weiss initial rating on Bitcoin, and honestly, I'm gonna be honest, I actually did not disagree with their rating on Bitcoin at that time in January. I thought they were pretty spot on. Now that doesn't mean that I agree with everything, and you shouldn't agree with everything from an individual or an entity, but C+ is appropriate in my opinion, just seeing where all of the altcoins and how they are building upon the concept of Bitcoin and improving it. I think a C+ is correct. But anyhow, the agency's latest pronouncement, and this is, I have to agree, I don't agree with this one, on privacy coins, which it urges the public to avoid, might be its most misinformed yet. It should go back to reviewing legacy financial institutions because Weiss is hopelessly out of its depth when it comes to crypto. How you spend your privacy coins is no one else's business. So the new report by Weiss ratings agency addresses government concerns about privacy coins, but observes that their technology can provide major benefits. It mentions government fears of privacy coins being used for the usual vices, drug, kiddie porn, terrorism, etc., before espousing the view that such coins do not present a threat right now due to their low usage. In observing that privacy coins do not currently present a threat to governments, Weiss is on firm ground. It then goes off at the deep end, however, and loses all credibility with the statement that follows. In its view, this is what Weiss says, cryptocurrencies that adhere to the high standards of transparency pioneered by Bitcoin still provide more than adequate resistance to censorship. Thus, efforts to discourage the usage of privacy coins for illicit activities would not hurt the crypto industry, nor would it deny citizens protection from invasions of their privacy. He says here, that's right, Weiss just suggested it would be in the interest of everyone to discourage use of privacy coins because Bitcoin will suffice. In an era of chain analysis, unprecedented state surveillance, and crackdowns on dissidents, there is apparently no need for privacy coins, which I'm with him. Like, that's crazy. Privacy coins are definitely necessary. I told you guys the other day that we just have to be careful in how we use them though, because let's just say at some point down the road, their algorithm for obfuscating your transactions is hacked. That opens us up, because it's a blockchain, it is a ledger that may open us up to everything we've done on those coins. So you just got to be careful, in my opinion. Can't tell you which ones you should and shouldn't use, but just do your due diligence on using privacy coins, and I think you should use them. Don't let these people, and I know you guys are smart enough to know this, but don't let them trick you into believing that privacy coins make you suspicious or suspect for doing illegal activities. That's how they try to get us, people. Kay goes on to say here, fun fact, there will never be a time when privacy coins are not controversial, and there is no uncertainty over their usage to resolve. Coins like Monero and Zcash work, they work well, and their usage pisses off governments and legacy ratings agencies. If there's not enough of an incentive to use them, what is? Instead of privacy coins, Weiss recommends cryptocurrencies that enjoy better scalability and transaction volume, focusing on those that earn Weiss ratings of B- or better, such as Cardano, EOS, and Stellar Lumens. You guys let me know your thoughts on this. I will just make a note, and I was telling my buddy about this. You know, that one article I read about the, I think, DEA agency saying they can track Monero and Zcash. I think primarily why they're saying that, and it's just skewed information, they can track it because most people are not encrypting their transactions with Monero. It's not a built-in default setting, so you have to actually encrypt it to send it where individuals won't be able to track it. So that's probably what's going on. A lot of the transactions over the Monero network are most likely not being anonymized, if that's a word. But you guys let me know your thoughts on this article and the first one. I would love to hear what you guys have to say. Well, that's pretty much it for today, and that's my 2 Satoshis. Make sure you guys like and subscribe and click that bell. Holla. Bounce.